Hello mga kamaniwise! Welcome back to my channel. Bida ang saya tayo in today's video. Pag-usapan natin ang Jollibee. Ang ticker code ay JFC. Maganda bang mag-invest sa Jollibee? Let's find out. Jollibee Foods Corporation is the largest and leading quick service restaurant in the Philippines. Sa ngayon, meron ng 19 brands. At ito ang mga brands ng JFC. Merong local brands and international brands. Key brands of JFC include Jollibee, Chowking, Red Ribbon, Mang Inasal, Greenwich, Burger King, among others. JFC also has substantial operations in China through Yonghe King, in Vietnam through Highlands Coffee, and in USA through Smashburger and Coffee Bean and Tea Leaf. Sa share price history, over the past 3 years, up and down ang share price ng JFC. And yung pinakamataas niya over the past 3 years ay 278.6 pesos. And then, bumaba ang share price recently to 238 pesos. So, is this a buy opportunity? First, let's start by analyzing JFC's financials using the PEACE framework, a strategy na natutunan ko from Value Investing College. I focus on these 5 key metrics to evaluate the company's financial performance: profitability, inflow of cash, efficiency, conservative debt level, and economic moat. Disclaimer: this is for informational purposes only and not a financial advice. Investing comes with risk, so it's important to do your own research before investing. Let's check the top line and bottom line ng JFC, ang kanyang revenue and net income. JFC's revenue has shown steady growth with a 10.57% annual growth rate from 2007 to 2024. And then from 2023 to 2024, revenue grew by 10.58%. On the other hand, net income fluctuated over the years and nag-negative noong 2020 due to the pandemic. However, it quickly recovered noong 2021 and has been growing steadily since then. And over the past 7 years, net profit grew at an average compound annual growth rate of 5.83%. Malaki ang growth from 2023 to 2024 at 17.67%. Sa revenue breakdown, JFC earns most of its revenue from the Philippines, 60.5%, while its international business naman contributes 39.5%. While JFC remains heavily reliant on the Philippine market, its global expansion is also a significant part of its business, contributing nearly 40% of total revenue. In terms of profit margin, mababa lang ang profit margin ng JFC. Nasa 3.4% noong 2023 and tumaas ng konti sa 3.7% noong December 2024. In terms of profitability, from 2007 to 2019, EPS was consistently positive, showing steady profitability. However, noong 2020, EPS dropped significantly to negative 10.44 due to pandemic-related losses. So, grabe ang impact ng pandemic sa business ng JFC. However, the company quickly recovered noong 2021 and has been consistently growing since then. Despite the pandemic setback in 2020, JFC managed to turn things around and achieve niya yung highest EPS in 2024. This reflects not only its strong business fundamentals, but also its successful expansion and operational efficiency. Sa inflow of cash, JFC maintained strong operating cash flow, except lang noong 2022 as it was severely affected by the pandemic. Pero it quickly recovered naman in 2021. This trend confirms JFC's resilience and financial strength. Sa efficiency, looking at return on equity, we can see that it remained stable from 2017 to 2019. However, it took a significant hit noong 2020 due to the pandemic. And then it quickly recovered noong 2021 and steadily improved since then. But if we compare the ROE versus industry, higher pa rin naman ang current ROE ng JFC versus industry average. In terms of debt to equity ratio, JFC is financially healthy given its reasonable debt to equity ratio of 60.4%. And mataas din ang kanyang interest coverage ratio at 3.6 times, which indicates that JFC has the capacity to meet its debt obligations. JFC's ROIC ay hindi gano'n kataas, likely due to its lower profit margins and capital-intensive expansion strategy. The company consistently reinvests in new stores and acquisitions, which increases capital employed. However, over time, these investments could drive higher profitability and efficiency. JFC's strongest moat is its powerful brand recognition, and meron din siyang deep emotional connection sa kanyang target market. And we all know that Jollibee is an iconic brand which is hard to replicate. And this strong brand loyalty allows JFC to maintain a strong market share and pricing power. JFC has one very strong moat, but it is enough to sustain its competitive advantage. Hindi dividend stock ang JFC, though meron din siyang maliit na dividend at 1.24% and annual payout siya. So if you invest in JFC, it should be for capital appreciation. And bonus na lang yung 1.2% na dividend. Moving forward, JFC plans to open 700 to 800 new stores this year, ngayong 2025, with 450 to 500 of them sa international markets. And the company aims to aggressively expand its flagship Jollibee brand in both new and existing markets, particularly sa US and Canada through franchising. JFC is also focusing on expanding its higher margin coffee and tea business through an asset light model with Compose Coffee. My calculated intrinsic value is 339 pesos. And my buy below price with 30% margin of safety is 237 pesos. And bumagsak ang share price recently sa 238 pesos, now below both the 50-day and 200-day moving averages. So it's signaling a short-term bearish trend. And ang RSI naman is nearing its oversold territory, suggesting a possible bounce. So there you have it. For me, considering JFC's solid financials, it's a buy for me, but only if within my buy below price. What do you think? Let me know your thoughts in the comment section below.